Today, we are laser focused on Bitcoin's $54 million pressure point. We're seeing a single price level that is threatening to trigger a massive, massive market move. $54.01 million, that is the exact amount of leveraged capital that is sitting just below the current price, literally waiting to get liquidated. And you can see exactly where that money is. Take a look at this heat map. That massive liquidation cluster, that bright yellow band you see, it represents a huge pool of forced selling. Now, if the price drops to this level, all of those leveraged long positions, they get closed out automatically, just adding fuel to the fire. It is a powerful, powerful magnet pulling the price down. But while all that capital creates a really powerful bearish case, new data is showing leverage building for a sharp move in the complete opposite direction. So what happens if the market moves the other way? Drop a like and share if you find this valuable. Okay, so that brings us to our first section. We have to start with the biggest, most obvious threat on the board, this downside liquidation magnet. So the main thing to look at on this chart is the liquidation zone between $88,500 and $89,500. Now on this heat map, it's simple. The brighter the color, the higher the concentration of capital at risk. And as you can see, this is by far the most intense zone on the entire map. And listen, this isn't some new development. This timeline shows that this pool of potential sell orders has been large and just persistent over the last 8 hours. It established itself early on, and since then, it's been the dominant feature, creating this constant incentive for price to move down and trigger all those liquidations. So the crucial point here is this. Because this potential sell-side pressure is so huge and it's been there for so long, it creates a powerful downward pull on the market. It's basically like gravity at this point. And if you're getting value from this analysis, make sure you're subscribed to the YouTube channel. But here's where the story gets a little more complicated. Despite that immense downward gravity we just talked about, the price hasn't collapsed. And that tells us we're in a high-stakes stalemate, where the data and the price are telling two totally different stories. Let's just see how this whole thing has developed. So on the left, you've got the heat map from 8 hours ago, right when that massive downside risk first formed. On the right, that's the current picture. And what has the price done in all that time? Well, it's just moved sideways, consolidating in an incredibly tight range and just absorbing all of that selling pressure without breaking down. This illustrates a market in perfect tension. I mean, that downward magnet is being fought tooth and nail by some significant buying power that's stepping in, refusing to let the price fall. It's a classic battle between the bears and the bulls, and, well, somebody has to lose. For live updates on how this plays out, follow us on Twitter. This stalemate leads us directly to the counter-narrative, the one we teased at the start of this whole explainer, the short squeeze anomaly. Okay, look very, very closely at this latest heat map. While everyone is focused on that massive liquidity pool down below, notice those new bright yellow bands that are forming above the current price, right around $91,500 and $92,000. Those are new, high-leverage short positions. Those are traders betting aggressively that we're about to see a downward move. Now, why is this so critical? Well, because this new cluster of shorts creates the absolute perfect fuel for a short squeeze. If buyers can just push the price up a little bit, it'll start liquidating those short positions. And that forces the short sellers to buy back their positions to cover their losses, which adds even more buying pressure. You see where this is going? It creates a feedback loop that can send the price rocketing higher. Okay, let's put all the pieces together. Let's synthesize this into a really clear thesis. What are the key breakout levels that you need to be watching? So here it is, the market synthesis. The main sentiment is clearly bearish, right? It's targeting that huge $54 million cluster of longs below 89.5. The counter signal, though, is that new buildup of shorts, which creates a very real short squeeze risk above 91.5. The result is a market that is coiled up like a spring, defined by extreme indecision. A high volatility breakout isn't just possible. At this point, it feels probable. And if you're getting an edge from this, do us a favor and subscribe to the channel. So the ultimate takeaway is this. The resolution is likely going to be triggered by a decisive break of one of two levels. If the market breaks the 88,500 support, expect a rapid move down as that massive liquidation cascade begins. But if it breaks the 91,500 resistance, expect a sharp, violent short squeeze higher. The first level to break is what's going to fuel the next major move for Bitcoin. The battle lines are drawn. A break of support targets $54 million in liquidations, while a break of resistance could trigger a violent squeeze higher. Which way do you think it's going to break? Let us know. And for ongoing updates, be sure to subscribe and drop a like below. Follow us on Twitter for more updates. We'll see you in the next one.